what's going on in the larger time frames as well, monthly, weekly, daily. Okay, so we can start. So welcome everybody. Good morning, good afternoon, good evening to all of you, and Happy New Year 2018. It is my wish that this is going to be a great year and profitable year for you and your loved ones. And today I want to touch on the long-term trends in Forex for 2018. And the way we're going to look at this and try to understand what the markets are going to do going forward is looking at the long-term trends. Okay, this is part of my FX Street bi-weekly webinars, and my invite is for you to join me twice a month. As you know, trading Forex and any other instrument is risky. Past performance is not indicative of future results. This is the usual disclaimer. The information I provide is for your general information, and myself, Fitzorca Trading, Fitzorca Consulting Incorporated, and FX Street will not be responsible for any losses incurred on investment made by listeners. Okay, so this is the usual disclaimer. I'm not going to talk about myself. If you follow my work, you know that I have over 21,000 hours of market exposure, studied with a few mentors, and I offer coaching and a new Fibstalker analysis and trading service that you can now also try on FX Street. So from the beginning of the year, there's a great deal, and I'm going to talk about that in a minute here. I'm a researcher, and my latest published paper here is the 3 intermediate and long-term scenarios in the US equity market. So at the end of the year, I always try to understand what's going on different markets, in different markets and asset classes. So today we're going to focus on Forex and long-term. Now, before I get there, just want to remind you that there is a new offer, 70% discount on FX Street for 30 days if you want to try my Fibstalker analysis and trading service. You can find the links below the information of this webinar as well. Okay, so it's analysis plus trading signals. And if you want to contact me, this is the information. So let's dive into the charts. If you have any questions, as always, please don't hesitate to ask. I'm always happy to answer any questions you might have. Okay, let's start from the dollar index. If we trade Forex, very important, we need to understand what's going on in the dollar index. Okay, so that's the very first thing I study, along with gold and silver. Assuming that the intermarket relationship between gold, silver, and dollar index stays unchanged, which is inversely proportional, which means that when gold and silver go up, the dollar index goes down, and vice versa. Okay, so long term for me it means monthly, weekly. I also have the daily here, so we're going to uncover any opportunities we might have on the daily time frame based on what we study. And if you know my work, you know that I focus on smart money, which is represented by an area where algos, the smart money, might come into the market, and this is represented by this these areas between the blue lines and the red lines here. So I use Fibonacci, but in an unconventional way, and I do not only use Fibonacci to identify areas of potential bounce. So I want to look at areas where the risk is very, very small. where the market might invert, and we know that the market can actually reverse its direction on a dime very, very quickly. And I believe that these are the best areas where we can participate. Of course, we never buy or sell blindly. We have mechanism to test whether participation is coming in or not. Okay. Now, when it comes to the dollar index, this is the first market we're going to review here, and there are a few observations that needs to be we need to do here. First of all, this market, has been in a downtrend for some time. In 2015, from end of 2014 to all to the show, market is reversing. So there are a number of areas that we have to consider. And besides smart money, I also look at what I define dump money. Without offending anybody, dump money is the way I model dump money in my method. Is the value area, the areas between, really, to see, in this case the previous trend is low, is down. Moving averages lag price. They form value area, and that value area, from that value area we see the price continuing in the same direction. The reason why that happens is because the crowd sees this move lower, and then they will keep participating in the direction of the previous move. Okay, starting from these value areas very often. So they are important. They're not as precise as the 50% or all the other choices that I have. Any questions in relation to that? Just let me know. Okay, so what we see here on the monthly we have a few observations to be done. First of all, there's a 50% from previous swing low here. This would be made of 2014 to recent highs at the beginning of 2017, and that's an area that came into play already, and that's the 91.48. This area is supporting price, and it's currently supporting price. So this week is still supporting price. Below that area, there is a dump money 90 period William moving average, which usually supports or acts as a resistance for price. Okay. Now on top, on the short side of things, we had 94.77, which is an extension that we cannot see it here on the monthly, but we can see it on the weekly and daily. That has acted as a resistance for price, and in the same area we have a dump money area, okay, which acted as a resistance. So as you can see, of course there are always different players on different time frames which might be pushing price higher or pushing price lower. So in this case we have 91.50 area pushing price higher, we have the 94.77 area pushing price lower. So it's not impossible to see this price moving higher again into the 94.70 area here. That's something I wanted to take into account. However, we also have to think that this area here is being worked out as support, and if the price drops below this level, then we're certainly going to move into the first target of this smart money setup here, which found participation. That would be 89 level, and the second target at the 86 level. Okay, so it's not impossible if we lose this area of support here at 91.50 to see price getting into the first and second target of this extension. So the dollar index seems to be doomed here to continue lower again if that resistance is superseded here, sorry, support of course, and that level would be the 96, 85, 90, 86 area there. Okay, so it's very important to keep in mind what can happen in the dollar. So either we get a lateral move for a few months here into 94, 95 area here, or if this level here is broken on the downside, we're going to get into the 86. At the moment, we are seeing this market reacting, but note that there is a lot of resistance above this price, dump money resistance above this price, and we can see that as you know, these areas here on the weekly and daily time frame. So one level I'm going to watch in the coming days is going to be the lows to lows here, and that's an extension short. There is also dump money on the daily time frame here that could actually find participation here and actually push this price, continue to push this price lower. All right. However, the larger time frames always takes precedence. So this support here, starting from 91.30, 91.50 here, it's real, and there is also the 50%. Okay, it's not impossible to see a higher reaction. The last observation I want to do, it's related to the reversal formation that the dollar index puts on when the market reverses. And that requires that dump money, weekly dump money, completely worked out, which means that the market attempts to get into these areas, rejected, and then eventually goes above. And when that happens, the 50% are usually not respected. An example is given here. Okay, so as usual, anything can happen, but we know that there is still a lot of resistance from dump money on the weekly time frame in this market. Okay, the dump money on the monthly as well is bearish. Therefore, there is at the moment there may be still more sideways for the dollar index, which we need to take into account when we consider the other markets. When I study the dollar index, I also like to review the US dollar, Singapore dollar. Now, the Singapore dollar is actually attached, pegged, not really pegged, but it uses a basket reference of currencies. And when we review price, it seems to me that basket of currencies is very similar to the basket of the dollar index. And that would not be, it's not, it's very realistic. In fact, we can think that Singapore actually, has the same trading partners that US has. Of course, there's a scale factor, but basically, from a practical point of view, I reviewed US dollar, Singapore dollar, because it's a good proxy for, at least at this stage, for the dollar index. So I always like to see what that market is doing as well, and whether this market is actually confirming what the dollar index is suggesting to us. Okay, very, very important market to review, very technical market as well. And when we look at the current prices, what we see is that this market is testing the partial range here from the lows in 2011 to the highs at the beginning of 2017 here, and these 50% are always very important levels. If they do not have enough power to reverse a trend, at least we get bounces as we are getting at the moment. Now this bounce may be just a bounce that brings price into the next measure move short, and on the daily time frame here we we can trace from lows to lows here, and this market is very close to test that level. You will see that this formation here is very similar to what we saw on the dollar index as well. Okay, now what we have to say here then is that if the 133.36 is respected, you're going to see a continuation lower here that is going to challenge the largest 50%. If that level is broken though, and the dollar index is really putting up a reversal, then this whole period of time here from May 2015 to basically end of last year, 2017, it's a big, huge range, right? And in that case, this market could actually reverse. Now, that said, this market has also printed lower lows here, and if it moves below these lows here, you're going to see the 29.69 very quickly. Okay, which means that will mean a continuation lower for the dollar index as well. Okay, and if this market reacts and brings price into a weekly area of dump money, we'll see how it reacts there, and if it's going to offer an opportunity to short to challenge these lows. Okay, there's a lot of resistance above, so do not expect or anticipate that this market is going to move like this. There's a lot of resistance here, so we're going to get possibly a bounce here and then another test of this 32.70 to see whether smart money is willing to support the US dollar Singapore dollar, and with it that would mean it's supporting the dollar index as well, or if you're going to get another opportunity to keep selling the US dollar Singapore dollar lower. Same situation that on the monthly that we saw for the dollar index is also presenting here on the US dollar Singapore dollar with the 90 period weighted moving average here, which is supporting price, and that's something that very often has the strength to bounce price higher. Should that happen, also on the monthly here we have dump money short that might come in and push price lower. Okay, so we are seeing a reaction here, and as I'm going to show you in a minute, the reaction is showing up also. The reaction is also showing on other markets as well. It might give us opportunities to sell highs in some cases or buy lows, as I'm going to show you in a minute. Okay, any questions so far? Are you with me? Give me a yes if you're with me. And okay, so let's review the majors and let's see what are the opportunities there. I'll try to cover all the majors and also other markets. So Australian dollar, US dollar, this market has baffled me a little bit. And the reason for that is the reaction that we saw here not only was very prompt and quick. The main problem though was that the 50% long has never traded in this market. It has traded on the New Zealand dollar US dollar, but not on this market. Okay, and so the only other level that I'm going to use to model smart money in this market is the extension, and that gives us a couple of targets above. One is 83.80, where we could see this market moving during this year, and even the second target 87.92, 88. Note also that a little bit higher than that there is the 89.50, which is the 50% retrace. If this market continues higher, and that would certainly be true if the dollar index continues lower, then we're going to see this market hitting these two targets as well. Keep these targets in mind. Of course, you wanna capture price on a larger time frame on a retrace. So let's see what could be the opportunities for a retrace. Note also that the monthly is becoming more and more bullish also when we look at the behavior of dump money as well. Okay, so on the weekly time frame, there are two. I'm going to give you two levels of potential retraces where we could capture this price. On the weekly would be a reaction, deep reaction into the 77.60 area. What I'm looking here for during this the beginning of the year, it's a bounce if we get there into 79.25 and 80 or 80 level here. Okay, that's one area you want to keep in mind. When it comes to the daily time frame, I'm looking at a sequence of extensions here, and the next level is the one that that you see here. I've already traced that. You see here on the chart is the 77.80. So what I'm looking for is a market moving into this area and then bouncing higher to actually reach the first high at 79.20 and then the second at 79.80. That's what I'm looking for in this market. Okay, now this market generally is in a when you look at the larger time frame, what we see here is a flag. But if the dollar index continues higher, this flag is going to be a reversal formation. And some resistance needs to be anticipated around 82.50 area. Okay. Moving to the euro US dollar, of course, if the dollar index continues laterally or with an upside bias, then the euro dollar might continue laterally here. When we look at the larger time frame, we have to consider some levels that might come into play. So let's first review the monthly here, because the monthly, it gives us a good idea of what's going on. You remember when in 2012, if you were following the markets, Draghi came in and say, I will do whatever it takes to save the euro, and that's when price reacted on top of this 50% from the lows in 2001 to the highs in 2008, and we had this reaction higher. Unfortunately, that reaction higher just was strong enough only to bring price into the 50% short here. That is the 139.60, and after that we saw that big huge move lower the prop price into that first target. Since then, if you also have followed my work on FX rate and the interviews with Dale Pinkert, I always mentioned the 50%. The following sequence in the measured move. Okay, it's a very large time frame. The 121.80 has not come into play yet. It could come into play in the coming weeks at the beginning of this year. And if that happens, and there is participation there, that could be the ticket for a higher dollar, or at least for a lateral correction here before either a continuation higher or a continuation lower in this market. The reason why we have to be very careful if this market moves lower is because the dump money area here on the monthly is not going to let this market move like this very quickly. We're going to get a lot of people who still see this move higher on a very large time frame, and this area here is going to actually push price higher, at least locally here. And therefore, if this market does not continue higher, we could see a lateral move for months here, potentially. Okay, and that's something to keep in mind when it comes to the dollar index. Sorry, to the euro dollar. Now, the euro dollar has been very technical lately. As you can see here on the weekly time frame, it has been moving on top of an area of dump money support. Okay, every time the market got into this area, found participation higher, market went back into the area, participation higher. When we combine these two, how the smart money has been trading this, there are some mix and matches here. First of all, within this area, the smart money has traded this short 118.80. We took this short. I took this short last year, and broke price into that first target. After that, and most recently during the second part of December here, smart money has traded this market higher, and that helped to bring price into that first target, which is this area here. So smart money participation around the 117.57 plus the participation of dump money as well caused this result. So if we just look at the dollar index, at the euro dollar without considering the dollar index, what we have to do here is to trace the next measure move. And that's where we could see new participation on the upside on the dollar index. Of course, again, when I trace these levels, I never trade them blindly. I want to see a confirmation. I use different techniques. I use the fibs talking time. I use dump money in a smaller time frame in order to commit for a continuation higher. Note that in this area there would be also a smart dump money on the weekly time frame. Okay, when we look at the daily time frame, we get even more information about what the market is could possibly do, and the reason for that is the larger measured move that we saw, which was this move here, can be broken in smaller moves, right? And for example, the first move higher is no more than a sequence of two 50% retraces. The first one, participation around the 117.05, first target hit, and the following measure move failed, initially participated and then failed, and that produced the deeper retrace into the 50%. Okay, that I showed you before, the one that I showed you on the weekly time frame. Now, what we see here is same story. The market went into that first target. If we look at the sequence, inner sequence here, there is an extension that has failed at the moment. And that's the highs to new highs. And as you can see, that has pierced even a few pips. That's a failure. And although there is dump money here that could push price higher, it seems very likely or possible for this market to correct into the next 50% level, or that retrace might be a deep, shallower retrace, in which case the market would stop around the 1950 area, which is also an area where we saw previous highs. Okay, so if the dollar index stops at the levels that I showed you before, that's where the euro dollar is going to stop, and that would be an opportunity for a continuation higher. Long term, we need to be very careful on the euro, because any strength could actually bring price to test this 121.80, and that's a very, very important level that if not immediately exceeded or overseeded, we might actually generate a push lower into a long dump money area. So some possible lateral move in this market on a larger time frame if this market is actually reversing around this 50%. You have to imagine something like this, okay? A market that is going to test the 50%, and if there is participation there, as there was in the past, then we're going to see a move lower in the dollar index. Sorry, in the euro dollar. Okay, so next is the pound versus US dollar. We still have some time, so I would like to cover all the majors. I hope this information is useful. I'm trying to give you relevant levels and explain them through the participation of smart money and dump money on price. And the next market is the pound. The pound is in a is recovering here. I just want to show you the beauty and how technical this market can be. There was a sequence of 50% from the highs in 2014 to the lows in 2015. Here, beginning of 2015, price went into that first area of resistance, which actually pushed price lower into, after a few weeks, into the first target. And this was just before the Brexit event. And what we saw then at the Brexit, the day of the Brexit, we saw the price correcting into this area of shorts, and in one day, the market went from the setup 148.85 into the 133.57. So the market then went also into that second target. So the sequence here, this is just to show you the sequence was broken. Okay, there was an attempt at participation around the new level of the sequence here, but that was not enough, and eventually that sequence, the 61% level, pierced, which gives us, which comforts us that this market might be forming a reversal. We also have to consider that this market has hit the first target of an extension here, and in reality this extension has a second target below. The first target was 118.93, 119 basically, and the second target is much below that level. Can the market get there? Yes, I believe it depends a lot on how the Brexit will play out. But it's also possible that this market gets into that 50%, 144.70 before that might happen. Now, we don't know what's going to happen. This market is in a recovery, and what I see here for this year is a continued recovery. In order to move lower, this market would need to work out all this support from dump money here. If this market has to reverse. So we will see if that happens. At some point we will know when all this dump money is not willing to support price any longer, and that's if this price puts on a reversal, that's when we will know that that it's safe to trade this market on the downside, but that's not the case at the moment, and it's not been very technical. This market mainly has been supported by dump money. That is still that support, and if this market retraces, that support will be there. The daily it's much clearer here, and we had this 50% here that was participated, the 32.94, 33 level here. This market has, this trades as a target above, which is around the previous highs here, the 36.60 area, and in the last few days of December here, we saw this strong move higher, very extended price. So the market has retested already the next extension long, which is this level here, 135. So if this market is retested at the beginning of the week here, this could actually keep pushing price higher, and we know now the next target is going to be 136.50, helping price into higher highs here, and potentially into that 144.60. So that's what we have to anticipate for this market. Okay. The New Zealand dollar US dollar compared to the Australian dollar has been much more technical, and you want to retest a long-term 50% level. Second test, a dangerous test, but that test was successful. The market worked out successfully the dump money conditions at these 50%. The 50% I'm talking about is shown here. Can be shown here on the chart. So we have two 50%. Okay, one is the 50% long from lows to highs. It was participated initially mid of 2017 here, as you can see, and that brought price into the 90-week moving average here, which acted as a resistance. But that was not the only level there that was actually pushing price. So there was also smart money, the 50%, 75-20, pushing price lower. Now, both dump money and smart money around this level were the participation there and the continuation of the participation was not capable of pushing price below this support area. Okay, the support area that was already there, 68.44, and again when price went into that, participation came in again and has not allowed price to move lower. So as you can see, this is a lateral move, right? So 50% have not hold. I'm not anticipating that this 50%, inner 50%, will hold. It's being tested at the moment, but I don't believe this is going to hold. So we might see the top of the range here being tested again. And the first level of resistance is going to be 74.16 and then 75.20, which is the 50% that has been tested before. So as you can see, this market is really moving laterally on a very large time frame here. So at the beginning of the year, we're likely going to continue higher here to test the 75.20. That's what we are going to look at and for in this market. And therefore, all the strategies should be trying to capture extensions here. And this market has been very, very strong on the upside. Very little retraces are visible on the weekly time frame, but on the daily time frame we have an extension, which is the 71.09. So I mentioned that 50% short. That 50% short might initially offer some resistance. As I mentioned, I also mentioned that I do not see this holding, meaning that I do not see participation coming here strongly and breaking and actually reversing this market. What I see is potential participation around this level that could actually push price a little bit lower into the next extension long, the 71.10, and then a continuation higher. So if we want to capture a high probable low risk opportunity, that would be the 71.10 if there is resistance, initial resistance around this level. Okay, so that's how we breach our long-term view on this market with what could happen next, what could be tradable, a tradable setup and opportunity here in order to bring price into 72.20 and then 72.80. All right, so those are my ideas for the New Zealand dollar, US dollar, Canadian dollar. Let's look at the larger time frame here. A very interesting and technical market it has been started moving very quickly again. As you can see, we see the same setups or same formation here that we see on the dollar index. Now, there is a 50% long that has come into play here. If you can see here, 120.50. It was from it's a partial range from previous swing low in 2011 to highs here, participated to the PIP, and below that there was also the 19 week moving average here on the monthly, which obviously supported price. The shorts here participated also a number of times around the 135.70 area at the end of 2016 and beginning of 2017, and that's what pushed this price lower. Okay. Post recently, dump money here came into play and it's pushing this price lower again, where into 125. In order to build some room for this market to move lower, okay, and we're talking about 300 to 400 pips here, and this could happen in the coming weeks, before or after a bounce here, as we're going to see on the daily time frame. The market could move lower here, and this could again bounce higher, this market, but at that point we're going to find very bearish conditions on the monthly for dump money. So if that happens, it could actually be the last time this level acts as support, and then we could see a continuation lower. As you can see, this setup is very important because it gives us the first target 119.20 and the second target is 110.60 area, and so the smart money is already in play here. The smart money move is already in play, and smart money will do whatever it takes if there are the conditions to bring price into these two targets here. Okay, so to me it looks very bearish. What we don't know, the only question mark for me, and it's how price is going to behave around 120.50. It's possible that it's going to bounce once more, and that is going to offer us a good opportunity to, on the smaller time frame, to play the long as well as the short once this market actually tests the dump money area here. So I think there are very good opportunities in this market, and there are targets below, well below, talking about 1500 pips here into 110.60. So clearly there are very good opportunities. US dollar, Swiss franc. This market is going to follow what the dollar does. If the dollar moves lower, this market is going to move lower as well. So let's see where we are now, and let's look at the larger time frame first. This is the second last market I'll focus on, and then I'll review the US dollar Japanese yen, and we'll close the webinar here. So the monthly, this market has been moving laterally here for years, basically. So these are still tradable on the smaller time frame, but on this large time frame, we just see a lateral market. And the top has been tested. The bottom is around the 94.70. There's not really a lot of potential in this market, and it's going to move as the dollar index moves. Okay, so at the moment we are seeing this 50% holding price. We will see that on the US dollar Japanese yen as well, and that's the 97.30 level. So this price holding here offers a first target of 101.82, and if the dollar index actually puts on a reversal, that's definitely possible. Um, However, when we look at all the participation, we also we also see here that the shorts that initially have not held now potentially could be holding this price, right? So if we get a reaction here and that reaction keeps moving price higher, we could see 0898.86 being tested here, which is the higher the higher upper bound here of this range move. So I don't see a lot of potential in this market. If we move below the 96.56, on the other hand, you're going to test the 94.38. But it's very we got some good trades in this market in October when on the daily we've seen a sequence of measure move here, very nice and clean sequence, mostly clean I would say, and 50% retrace here into first and second target to the pip. The next measure move fails, the market trades again the 50% from the highs, and that would be highs to lows here. Market gets into that first target, and the next measure move in the sequence also trades. So all these trades here, they're pretty good opportunities. So this area trades and then gets into that first target, almost to the pip there, and then the participation on the 50% long takes place. So it's a technical market. It can be a technical market on the smaller time frames, but it's not, it's not a great instrument, honestly. What is a great instrument to me? It's the use of Japanese yen. And with this, we're going to close this long-term review. A beautiful market. I really love this market, trading it and analyzing. And recently, 2016 has been all about the initial move lower, and then the market basically working out dump money on the weekly time frame, short, to actually respect the participation that we saw around this 170. And that's real. It's there. It has moved higher very quickly in a few months, and next measure move also has been respected. There was a move lower here that respected this area, and then we saw participation into that. So the Japanese yen is very weak here, even compared to the dollar. So this participation here, which now has been respected for a number of months, 1, 2, 3, and 4, as a first target at 123.50. That's where this market could go. There's also support from dump money monthly here, so it's not impossible to see that, despite a weak dollar. Of course, if the dollar completes a reversal and continues higher, then this target is going to be very handy. But there are other targets and other inner measure moves on the other time frames. For example, there is also 50% here on the weekly time frame, from lows to highs. There was participation around this area here, and there is a target as well above, which is 116.40, which you can see here, the 116.40. Okay, so now this market has been moving laterally for several weeks here, and it's not fun, but nevertheless, when we move on a smaller time frame, this is the tail, and then if you even lower on the smaller time frame, which is for our time frame, you can see other opportunities as well. But there's this setup here, that's been respected in the last few days as well, which gives even another closer target, which is 114.42. So very, very technical market with setups on the monthly, on the weekly, and on the daily, all pointing higher. Therefore, it seems reasonable to anticipate that this market might continue high in the coming weeks and potentially retest the previous highs here and moving even higher. Okay. So this is it for the long term and what we can anticipate. If you have any questions, you can write them down. And I want to remind you also that you can reach me anytime, stalkertrading.com or stalker@gmail.com. And it's going to be a new offer. If you wanna come in the trading room, have a look at the link. It's a great 70% discount for every street users, and therefore that's my good wish and way. Together with Ever Street, we can help in order to get you started on this in trading in the new year. So thank you very much, and if there are no questions, I will close it here. Thanks for being here, Charles, Abdul, Nick, Adam, and I wish you a great start of the year and a great 2018 to you and your loved ones, and may it be the most profitable year ever, and I wish you all the best. Thank you very much, and bye bye now.